Welcome to a Thursday night stock charts live. It is a beautiful day here in New York, a perfect July. Nothing like Long Island in the summertime. So beautiful weather. Hope everybody's having a great July, enjoying your summer. What we're going to talk about today are the economic data reports that had come out during the week. We're going to talk about some headlines that are out there. We're going to talk about the Federal Reserve's balance sheet. We're going to talk about the weekly charts. How are we looking this trading week? It's a Thursday night, and as I always like to say, one trading day left to go. So a lot can change on these weekly charts by the end of business tomorrow. So the purpose of this session tonight is just to get a feel, do a pulse check about how we're probably going to close out the week. Tomorrow we have non-farm payrolls coming out. Big number. Bad news is good news. Remember, bad news is good news, as sick and perverse as it is on Wall Street. So let's take a second, throw on my spectacles, and say hello to people as people drift in. Franklin. Yeah, I'm feeling good. It's a good turnaround on the week. Good bounce on the mining stocks. Cal-Maine Foods, really nice week this week. Options trades did really well. LABU is just ripping. Trader Isaac, good evening, Bob. Good evening to you, sir. Cal-Maine and LABU, two nice ones from a couple of weeks ago. Yeah, we own them. We're doing very well with them. Very pleased. Both of those charts, the thing to remember with both of these charts is that more so with Cal-Maine Foods, it's a monthly breakout. It's a massive monthly and quarterly breakout. It broke out a while ago. As for LABU, we've been in it for a while, but we hung with the trade because we saw that the weekly Stokes had broken out several weeks ago, and they pulled back to retest the breakout point, and here we are enjoying the upswing. So we're going to be holding on to both of those for a while longer. Talon, that's right. Danny, hey, brother. Hi, Bob, Frank. Lewis, welcome aboard, sir. And for those just joining in, I ran the analytics for the channel, and only 50% actually 60% of you are subscribed. 40% of you are not subscribed. I know you're out there. And 97.1, I don't know how 97.1 is the metric, but 97.1% of you are male. We need more females. We need more estrogen. So smash the like, subscribe to the channel, and enjoy when we go live. And let's get to it. Yoga Mac. Hello, sir. Welcome aboard. What else do we have? All right, that's it. Okay. All right, let's talk about economic data. Tomorrow, as mentioned, non-farm payrolls, the pimp Mac daddy of them all, as I like to say. Bad news is good news. So what does that mean? Well, you take a look at initial jobless claims today. They came in higher than what was expected. What did the stock market do? Rally. Continuing jobless claims came in higher than the prior read. What did the stock market do? Rallied. So bad news is good news, as sick and perverse as it is. Why? It puts pressure on the Federal Reserve not to be as aggressive, not to be as hawkish, keeps a lid on interest rates, and allows equities to rally higher. So job openings plunged by most since COVID crash remain stubbornly high, nearly 2 openings for every unemployed worker. But we still have a surplus of job openings. However, they're beginning to decline considerably. I closed out a tab by accident. U.S. services signals bout of stagflation ahead. Employment contracts most since COVID collapse. So we're seeing the job market come under pressure, and it's consistent with what is a recession. And for whatever reason, people don't want to. I scratched myself, I'm bleeding. People don't want to. I shouldn't say people. Ordinary people like you and I have no problem saying, all right, last quarter was a negative GDP. Okay. Atlanta Federal Reserve is going to say Q2 is going to be negative GDP. Okay. Recession, right? Why the Wall Street thugs do not want to acknowledge the fact that we are in recession, not quite sure, but we are in recession and the job market is beginning to pick up on it. Initial and continuing jobless claims accelerate as layoffs soar. So, initial jobless claims climbing, and they've been climbing, whereas U.S. continuing jobless claims really beginning to pick up steam now. Where else are we seeing pressure? Mortgage rates crash, most since Lehman, as loan demand collapses. So, you're seeing loan demand drop like a rock as interest rates spike up higher. So what does that impact? That impacts durable goods, washing machines, dryers, carpeting, paint, everything that you buy when you buy a new home, that all gets impacted. The ripple effect of housing throughout the entire economy is really profound. It can only be understated. And when you take a look at the home affordability, wow, this chart really got small. Better off with this one. Home affordability index is dropping like a rock. So the people that are coming out of college with student debt, they may have been out of college for 10 years and they're still paying off student debt. They can't buy a home because inflation has sent home prices through the roof. Here's the home price index, ripping, continuing to press up higher, but that's going to come under pressure soon. Now, we like to think that the elitists, I hate when people call them elites because they're not elites. They're pond scum. The elitists that are out there, the Davos crowd, the New York City crowd, the San Francisco crowd, the Washington, D.C. crowd, those who profess to be our leaders and are completely and utterly incompetent. And we're going to go to that in a moment because West Texas Intermediate crude drops after huge surprise build. Crack spreads soar on product draws. So you're seeing distillates get drawn down where you're seeing crude beginning to build up. What is that consistent with? Recession. And we better thank our lucky stars that this is happening because what we have is a president that is doing the unconscionable. He is emptying the strategic oil reserves. That is for an emergency. The first drawdown of the strategic petroleum reserve was during Gulf War I. The second was after Hurricane Katrina, 15 billion and 20 billion gallons respectively. They are drawing down our strategic petroleum reserves by 1 million barrels per day. And folks, it's going abroad, which it's meant to be used during emergencies, not fake ones, made up such as Democrats facing a catastrophic failure in the midterms. And here's a chart of the petroleum reserves rolling over. But where's it going? More than 5 billion barrels of oil, million barrels of oil were part of a historic U.S. SPR, Strategic Petroleum Reserve release, were exported to Europe and Asia last month. And even China is getting a shipment. China and India are getting discounted Russian oil. So if they're taking in our oil, we're probably giving them at a discounted price. What does this mean? It means that it puts this country, as we head into hurricane season, in a very perilous situation. And God forbid we have an emergency, yet we have no strategic petroleum reserves to draw off of, or unless they are woefully inadequate. This is, I want to use the word reckless. It's really criminal what's being done here. It doesn't need to get done. All you needed to do was increase production. Only a couple of years ago, we were energy independent. We were net exporters of energy. Now we're reliant upon our strategic petroleum reserves. This is nuts, but it's all man-made. These are man-made catastrophes. Everything that we're seeing, whether it be COVID, the vaccines, blah, 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 it's all man-made. We did it to ourselves, and they're going to make it worse. Wait till we need to refill the SPR, because the geniuses over in the G7 in the US, we plan on capping. How they plan on doing this, I have no idea. Capping Russian oil at between $40 and $60, a move that could send oil up to $380 a barrel. Don't think that this is not intentional. This is all a part of the Green New Deal, the Great Reset, World Economic Forum, all this. Again, more self-inflicted damage. This didn't have to happen. You're forced to pay even higher prices to fill gas storage. Well, they shouldn't have embargoed the Russian gas and Russian oil. They spent billions on Nord Stream 1, Nord Stream 2. Now they're useless. Biden's green agenda is causing U.S. power grid to be incredibly vulnerable. And you have a push to have electric cars that are going to draw more off of the grid. Yet what they're going to need to turn to keep the grid up and running is, get this, coal. Coal emerges victorious as sanctions and green policies backfire. So coal companies are making a bundle off of the Green New Deal because they pulled the trigger on this Green New Deal way before we had the means of solar, wind, the means to replace fossil fuels. So we're polluting more now than we were in prior years due to the fact that these incompetent crooks, these so-called elites, but they are elitists, their time is coming to a close. I hope. The deep state is sadistic. And here's a great chart. Here is households' net worth level declining, where debt service payments are on the rise. This is exactly the opposite of where you want to be. This is the makings of slavery, debt slaves in this country. Why is all this happening? First, they want to punish the people who voted for Trump and see them suffer forever for having done so. Second, they want to gut the middle class and promote dependency and demoralization to stop it from ever happening again. The fix, and this was just next. Trump did this in the back half of his presidency. Schedule F employees could be fired by the president. Right now, it's very difficult to fire federal employees. But under Schedule F, this is why we need a whole new regime and no rhino Republicans in the White House. They could fire, they would no longer have civil service protection due to their positions as policymakers and influencers. This is what we need, Schedule F. And here, this is what I wanted to read. The executive order demanded a thorough review of all federal employees to see who would qualify. Only one agency responded. I'm not sure who that is. I wish they would have named it in time before the election was called for Biden, and concluded that it would pertain to 88% of its employees. Think about the gutting of the federal government, the bureaucracy, the deep state, if this Schedule F were ever to be implemented. And this is why they cannot allow a Trump, a DeSantis to win the White House. And how they're going to steal the midterms is yet to be seen, but buckle up. And as we take a look at other threats to the United States externally, the Chinese yuan, and I find this really fascinating. I thought they were being hyperbolic initially, but then I went on to read, and I saw a couple of bits that I thought were significant and that we really need to focus on, because right now the dollar is extremely strong. Heck, it kicked the crap out of me on our gold mining stocks, or on my gold stocks. Well, I don't know gold stocks. I own gold. Our silver stocks, hammered. So the yuan is becoming more and more popular, because what separated us from the Chinese was the rule of law. But as we have weaponized the dollar, and as we've shown, especially during the Summer of Love, which was the BLM riots, what are those morons? The Antifa morons, they're rioting. Nobody's gone to jail, really. There was $2 billion worth of damage. Cities looted. Poor people in poor areas of cities no longer have CVSs. They no longer have Arby's in certain areas because they got burned down. So the moral high road that we once had relative to the Chinese, as we go down this dystopian path, is becoming less and less. Certainly, we're still well ahead of them, but we're doing our damnedest to really take away any moral high road that we may have over them. And according to UBS Asset Management's annual reserve manager survey, about 85% of central banks said they are invested in or are considering investing in the Chinese yuan. That is up from 81% a year earlier. Think about that. USB surveyed 30 top central banks. On average, central bank foreign exchange managers plan to hold about 5.8% in reserves in yuan within the next 10 years. That would represent a sharp increase from 2.9% levels. This is as of late June. So that's a huge jump. This is really where the rubber meets the road. Meanwhile, the average share of US dollar holdings dropped to 63% in June of 22. That was down from 69% the previous year. That trend is unsustainable for the world's reserve currency. This is not good. And why did this happen? Well, it got expedited because we weaponized the SWIFT dollar system. It has given the U.S. dominance and the U.S. a great deal of leverage over other countries. But what did we do? We weaponized it. And the U.S. went a step further. In an unprecedented move, the Federal Reserve froze Russia's dollar reserves. Think about that. You have dollar reserve status. That gives you preeminence throughout the globe. Yet somebody who invested in the world's reserve currency, those dollars that they hold are now worthless. They can't use them. So why would any country ever want to be overly reliant upon the US dollar when now it's in the books? We have chiseled into stone our willingness to weaponize the US dollar system. In effect, Russia's dollar's assets are valueless to the country. It can't use them at all. Think about it. And I mentioned this when we were talking about, the government was talking about banning Russia from SWIFT. I said, that's the worst thing we could possibly do. This will come back to haunt us. It's going to come back to haunt us in the coming years. And this rally in the dollar that we've seen is probably only as good as the first rate hike we're going to see out of the ECB, which is supposed to happen in late July. Once that happens, we're no longer the only major economy that's out there that's raising interest rates. So that'll put pressure on the US dollar. It'll boost up the euro. I mentioned earlier about the fix. What you're going to see is mental gymnastics between now and the midterm elections. Biden DOJ sues to block Arizona's proof of citizenship voting law. It's the most outrageous thing in the entire world. I mean, you can't buy a gun unless everybody knows your blood type, where you live. They're even doxing people in California that own a gun or have concealed carry permits and releasing their addresses. You can't get on an airline. If anyone wants to tell me that 81 million people voted for Joe Biden, I got a bridge to sell you in Brooklyn. I wouldn't believe it for a second. Do I have the proof? No, I don't. But anecdotally, internally, in my gut, do I believe that there was fraud? Absolutely. So here is, and this guy almost made it to the Supreme Court, our Attorney General. He's blocking Arizona from mandating, hey, are you a U.S. citizen? We want to see. So get ready for more of this stuff. Here's more of what they're planning. They plan on, they've already weaponized the U.S. dollar. They've weaponized the banks. They've weaponized the financial system, the SWIFT system. They have destroyed the energy system. They are poised to cap Russian oil prices, threatening to anybody that knows anything about caps on anything. It causes prices to go higher because production goes lower. This is all part of the Green New Deal. And another part of the Green New Deal is to reduce the amount of nitrogen. And it's also to reduce the amount of food so you become overly reliant upon the government for your food. They want reliance on the government. So Dutch farmers bring tank to fertilizer protest. Cops shoot a tractor. I saw the video on this. It's the truth. They tried to say that the tractor tried to run them over. They did not. I saw the video. The tractor did not try to run them over. I mean, this tractor was moving like 5 miles an hour. So, oh, here it is. Watch this. There's a cop. You can't make this stuff up. Dutch farmers protest and the war on food. I'll share this article with you. I think it's fascinating, and it's not limited to the Netherlands. Germany's contemplating it. Oh my God, I'm not sharing my screen. Sorry. Oh my God. Sorry about that. I'll replay that video. I thought I was sharing. Where is that video? There it is. Come on. Here comes a tractor. There goes the... Hey, wapens, jongen, wapens. Hey, kom maar, rij weg, jongen, rij weg. Wapens is dat. Incredible, right? All right. So the good news is this, is that thanks, Alec. Daddy, I'm losing it, man. I'm losing. I'm even relaxed. I'm not even nervous. Sometimes I'm nervous. So now I'm nervous. I can't believe I did that. It's crazy. It's crazy. God forbid somebody got killed. God forbid. Absolutely. Absolutely. But he won't be. He's going to get a promotion. So here's the good news. Here's somebody that knows me. I have an icy margarita by the pool. I'm very, very jealous. You know exactly how to get to me. All right. So the good news is this. The World Economic Forum has your back. You are not going to go hungry. You are going to have protein because what they are promoting now, eating insects is really delicious. So, oh, look at that. Worm pizza, worm chocolate. Awesome. This is going to be glorious. They want to cull 30% of all the cows on the earth, but we're going to have insects. That'll end well. Let's talk about the Federal Reserve's balance sheet. All right, so with all the talk about the Fed being hawkish, blah, 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 they were supposed to reduce the size of their balance sheet in the month of June. They did by a very, very slight amount. It was supposed to be like $30 billion. It was a couple of $1 billion. Did the Federal Reserve's balance sheet drop this week? Yes, it did, by a smidge. So they're supposed to go from $30 billion up to $60 billion in reduction of the Fed's balance sheet in August. I don't see it happening. I just don't see it happening. So that's the headline. Sorry about not sharing my screen. I apologize for that. Which one of Elon's kids will declare war on Mars because they didn't receive enough attention? I just heard he had twins with one of his employees in 2021. I guess they kept that hidden. I heard there's toilet water beer now. Dollar blah XRP low. Yeah, you can't even buy it in the United States. I think you can buy it in Europe. All right, let's go to some weekly charts. When we go over these, keep in mind, as I always like to say, one trading day left to go without fail. When I go over these charts on Saturdays with members, a couple of the charts had a dramatic change from Thursday night through Friday. We never know what it's going to be. So keep an open mind. Always, before you make a big decision, if you're basing your decisions off of a weekly chart setup, try to wait until it's late in the day on Friday to make sure the chart hasn't changed as much. Then pull the trigger. I'm sure I speak for everyone here. You're doing such a service and we'll appreciate you. Thank you very much. It's very kind of you, Denny. Appreciate that. You're a gentleman. Okay, so we'll kick things off with, I'm really excited about looking at these charts because this week has been a good week. The 10-year yield weekly chart. Now, this is not really a good thing. In fact, it's probably a problem. We closed out the session today above a 3 handle on the 10-year yield. That's not good for growth stocks, technology stocks. It's not good. So this is a bullish reversal bar, implying that we may head higher. And how do we do today? I know we were up. See the quality of the close. A good close. We closed back above that 3 handle. So I think that this chart here, absent the non-farm payrolls coming out tomorrow morning, this chart here is the biggest problem. I mean, if we begin to break out above the upper band of resistance in blue at around 3.15 on the 10-year yield, the markets are going to price in they're going to discount stocks. They're going to start discounting stocks, growth stocks. So this is one of my worries, no doubt about it. The TLT, 20-year bond ETF, very bearish week this week. We were higher. Clearly, 117.50 is now resistance. I know 115 was decent support. We're currently below that. We'll see if we rally back and close back above it tomorrow. But the 20-year bond is in trouble. Should we close out the week as we appear to be closing, which is very weak. Now, we have a bit of support immediately below. Volume to the downside dropped off today, which is a good sign. So you're not seeing a lot of distribution by institutions of treasuries, and that's always good. Now, moving on to tips. Another bearish. Now, I'm looking to buy some tips, and I'm holding off on buying them because I think that we could break to new weekly lower lows next week, especially if we get a bout of deflation. What do I mean by that? Well, you're seeing bankruptcies pick up. You're seeing inventories that had built up over Target, Walmart. All of those inventories you're going to get price cuts. I've mentioned this in the past, price cuts. They're going to get rid of all that inventory. And then what's going to happen? You're going to get a reprieve on certain areas of inflation for a couple of months. But the thing is that these companies are not going to go restocking again because the consumer is broke. Remember the chart I mentioned earlier? I showed you. Well, actually, I didn't show it to you because wasn't sharing my screen. Where is it? Son of a bitch. Mm-hmm. All right. I don't want to bore everybody to tears here. You'll have to take my word for it that household net worth is declining and consumer debt is going through the roof. Now, I can tell you what's going to happen fairly soon is that as delinquencies pick up, I can't find it. As delinquencies pick up, and you're already seeing it in auto loans delinquencies are picking up. So as that begins to happen, banks are going to cut limits on credit cards, and they're going to do it quickly, and they're going to do it all at once. So that is going to hurt the consumer. So there's no way that these companies are going to build up inventories again. What does that mean? Well, it means if they're going to do just in time for delivery on goods, that means that they're going to have pricing power back again. Inflation is going to ramp back up. So we may get a bout of deflation because of a drawdown in inventories, but then inflation picks back up because they're not going to have a surplus of goods. So I'm looking for the tip market to pull back further here. Long story short, let's draw our trend line. There you have it. Let's see how we close out the day. Not a good day. Not a good day at all. So we'll be looking at a good buy point on the tips. I'm just not seeing it right now to get long. But when I do, of course, I'll be sending out alerts to members, and they can buy if they so choose. And why do I like the tips? They're yielding 6.63%. So nothing to gripe about. But I needed a lower price or a breakout, one of the two. I don't care which. I believe you, Bob, because pay rates won't be rising for a few years now. Yeah. Well, I was listening to, I forget who was talking about this. Back in 1971, when they took the United States off of the gold standard, and it was just pure fiat, nothing backing the currency, there was a move by, it was coordinated. It was coordinated between the government and the corporatists. They wanted to keep wage growth really, really low. So one of the reasons why you have women in the workforce to such a great extent as you do now, relative to the pre-1971 move, is for two reasons. One, a crisis was created. What was the crisis? Well, when Nixon took us off of the gold standard, inflation went through the roof. Before Nixon took us off the gold standard, a guy could work a job, his wife could stay home, take care of 3 kids, 4 kids, send them off to school, college. Most kids got through college because college was affordable. And they got a hand from their parents. But life was more affordable. Then we got taken off of the gold standard. What did that require? Well, it required both the husband and wife to go into the workforce. What did that do to wages? Cramped them down. So you have 2 people working now. So horrible for the nuclear family, but great if you're in a corporation. And I heard this. I have a family member that's an HR executive, and I'm talking about all of these companies that are out there paying employees $4,000. I don't want to get into an abortion topic. I don't want to talk about it, but they're paying employees $4,000 to fly them to a state where they have friendly laws for abortion, late term abortions. I don't know. I don't know much about it. So what's that all about? Her take on is that if you have an employee that is having children, they're less productive. They call in sick more. So it actually pays off for them in the longer term that person doesn't have more kids because they're more productive at work. You do your own research. It sounds plausible. It sounds as cynical and horrible as it sounds horrible, but it's plausible in this day and age. If they get us to eat bugs, you can thank Thailand for making it seem okay. True. There's a bit of a delay in getting comments up, so I'm sorry. There we go. Come on, man. A lot of these old loans will be cars dropped off or turned in cents they will be upside down. Very true. Yes, very true. That's a good point, Franklin. I didn't think about that. Follow, smash, subscribe, and like the Contrarian Trader. Thank you very, very much, Yoga Mac. Again, I have 40% of you out there that are not subscribed to the channel. Please like, subscribe. It helps me out a great deal. Yes, and Franklin, reiterating, hit the like button. Thank you very much. All right, let's move on. I want to get to some chart requests. U.S. dollar, a big week. We are very close to multi-year highs on the U.S. dollar, but I'm getting the feeling that we may be closer to a double top on the U.S. dollar. Let's go to the daily chart. As of last night, we had broken out on a weekly chart, but now we've pulled back a little bit. Daily chart. To me, this is topping action. Doesn't mean it can't go up higher. But ever since we back here, June the 30th, and we had this outside reversal bar, which was negated here on the first, but then we had a fade on that day. Then we had a gap up, then another gap up. Each day saw a fade. To me, this is kind of like a blow off top on the US dollar. We managed to eke out a gain today, but I think we're much closer to a top on the dollar than we are to any type of a bottom. Now, the VIX, this is one chart here that I'm going to be watching the weekly chart very, very closely tomorrow. Why? It's because this is our third consecutive down week after breaking out back during the week of June the 13th. There's only one problem, and that problem is this, is that each time we have pulled back, we've retested a breakout point, and it's held, including today. Now, we're clearly seeing resistance at the 30 level, and when you take a look at the weekly chart, it's stepping higher, and it's doing the same thing. Despite the fact that we're down on the week on price, the VIX is hooking up. You can see a little hook up there off of the lower band of support, daily chart. Now, today we broke support. We did bounce off the 25.50. Ultimate oscillator hooking up. Stokes are oversold, but they could stay oversold. Typically, the VIX doesn't do a V shape or a U shape. It typically double bottoms out. You saw it here, 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 but then buckle up. The Dow Transports. This is our canary in the coal mine for equities. As go the Dow Transports, so go the rest of the equity market. Last week, very bearish week. This week, very bullish week. What matters is the close. How do we close out this week? One trading day left to go. How is our volume? Volume on the week is light. It's probably going to roll in light. But yes, it is an abbreviated week. Daily chart. Daily chart, we hit the upper band of resistance on very light volume today. So while I want to get excited, I really, really want to get excited about a breakout here on the Dow Transports, it's difficult to get excited when you have volume, which is so light. You need your institutions. The Dow Jones Industrial Average, weekly chart, bullish key reversal bar. Again, we're up nearly a percentage point on the week. A W formation forming on Stokes, maybe. Volume, very light, even for an abbreviated week. What I think is really interesting, and this applies to all these charts, there may be an exception, but most of these charts, MACD is extremely extended and ripe for a rally. So, interesting price action here on the Dow and MACD daily chart. Loving the RSI. This is what I look for. Higher lows. Higher lows. And we have a bit of a breakout. And we broke out today on a daily time frame. So what I suspect is going to happen here is that we may rally tomorrow, but I think what we need to pull back, we need to retest the 31,250 mark on the Dow. That would be a good thing, assuming that it holds. If it fails, that's not such a good thing. It's very, very bearish. S&P 500, bullish key reversal bar. Folks, if you're new, if you're wondering the terminology I'm using, bullish engulfing, bullish key reversal, it's candlestick pattern terminology. I have a 5-part video tutorial below. It's free. Just enter your email address. We hate spam too. You'll not be spammed. You get a 5-part video series free of charge. I just want everybody to understand the terminology. RSI rising, no breakout. Stokes rising, no breakout. Volume horrendously low. You want to call it the dog days of summer? Okay. But I'm a purist. I need volume. When I'm trading equities, dirty-minded guys, you. Daily chart, family-friendly show. Again, same as the Dow Jones, higher lows on RSI, Stokes rising, looking good. A clean breakout here. I mean, nice. We technically broke out yesterday. We saw a continuation moved higher today. Here's the problem. I mean, this stuff matters. I know it's technical, it's boring, but these are the indicators that keep us alive. You don't want to see declining volume like this. Volume should have been rising today. On a day where we were up 1.5%, to have volume like this is an insult. Trip Q's weekly chart. Up, wow, what a move. Up over 4.5% on the week. We're at resistance, no breakout there. But we're very close to an outside reversal bar, or again, a bullish engulfing. If we continue to press higher tomorrow, we're very close, within striking distance. Loving the Stokes, higher low, no breakout yet. We have broken out, I believe, on RSI. Let's memorialize, validate. Here's our higher low. Here's another higher low. Let's get rid of this. Yeah, there's your breakout. Clean breakout. So the Q's looking good. So from a macro perspective, the equity markets are looking good. We do need to keep in mind that they're still very expensive. So while I'm predicting that we're probably going to get a continuation rally higher, we have a lot of headwinds out there, a lot. The first of which is we have a government that is working against the people. I don't know how anybody argues that point anymore, but you have a government working against their own people, whether you're in Europe, whether you're in the United States, and I'm talking about the EU, I'm not talking about Eastern Europe. Daily chart here, RSI, we're back above 50. I mean, we haven't been above 50 since back here, and that failed. That was early June. We haven't been above 50 in earnest since back here in April. Think about that. That's incredible. We closed today at resistance. Now, I was looking to sell premium on the chip Qs. The options are very, very cheap right now. The implied volatility is like at 21%. So it didn't make sense to sell the options. Wouldn't have got paid for the risk. But we did sell them. We closed out our trade last week. So if you're looking to buy the options on the Qs, they're cheap right now. I don't like the setup here, though, because we're right at resistance. We need a breakout. A close above 297 would have me excited. Volume, meh. Light volume. Seen a lot of comments come through. Hey, Bob, been listening while building custom cabinets. Awesome. I've been in Carvana since $20 and I'm holding for a multi-day rally. Can you please see if you're a lunatic? I've been sitting in gold stocks, pal. So if you're a lunatic, I'm a lunatic too. Sure. Yoga Mac. Joe Biden and his son Hunter are national security threats, no doubt. Pfizer is basically a terrorist organization. I agree. Facebook being told by White House to censor, allowing having illegitimates like Flavor Flav. Madmen. PRVA chart requests. Trader Isaac. Hello, my friend. You got it, brother. All right. Falcon. Hey, Bob. I just read through that one. Wrong click. 77, man 77. Ah, Salty Army. Shout out to the Salty Army. Reese, Salty Army salutes you. Thank you very much. Love the Salty Army. Looks like the Great Reset is in full effect. What do you think of STVGF? We'll take a look. Folks, if you're wondering what we're talking about, head on over to the Salt Must Flow for a madman of a host. You'll enjoy it. As a matter of fact, he went live last night. But awesome live streams. BBY, 24.62 million, volume 61. I like you thinking. All right, so you got to be careful with the share short, right? If you want a multi-day short squeeze. So I'm not sure what the average is for shares being traded on a daily basis for Best Buy, but 61.5 million, that would cover the entire short position. So I would like to have seen lower volume than that to get a good short squeeze. We'll take a look at the chart. If you would have showed me average daily volume on a 3-month moving, 6-month moving basis of 5 million shares, that's sexy. That's a multi-day short squeeze. I think it's better to try healthcare. Some Humana. We were talking about Humana today, looking really, really good. I believe that's a healthcare stock. Fact check me on that. Chinese stocks. I know everybody likes them. I understand the why behind it. They're going to do stimulus over there, despite inflation. I get it. I don't trade those stocks. I avoid them because you never know when they weaponize their stock market. Yoga Mac RVN, you got it. You bet, Pete. Okay, moving on. I'm going to speed it up here a little bit so we could. All I want to do is I want to go over the semis and then gold. Semis looking really, really good. I have favorites here. First, let's see how we closed out the day. I hate the volume. The day. Volume rose, but still below average. We need a higher low. My favorites, NVIDIA. Still a bit expensive. Don't like the volume. The other is Qualcomm. Very cheap. We have our higher low here on QCOM. This is one way I may put a trade on here as soon as tomorrow. Now, what we're looking at here is we're qualifying the stock, right? We know we have a bullish reversal bar on the week. That's good stuff. Volume is not so good. So I haven't been putting a lot of core positions on, meaning buying common stock. I mean, we're limited. Gold stocks, silver stocks, food stocks like Cal-Maine Foods doing really, really well. Biotechs doing really, really well. So Qualcomm, I'd probably open up a strangle here, if not a straddle. Now, you can argue that we broke out today versus this prior peak. We do have a higher low. That's not arguable. Loving the higher low here. Loving the W formation on RSI and the higher low. Now we have a higher high. So where my mind goes to first when I see this type of price action, a breakout on RSI, A breakout on price, good stuff. That's validation. It's confirmation of a breakout. What we want to see now is a pullback and a retest of both RSI and the share price. Now, being an option seller, I don't really need to wait for that retest. If I want to buy the common stock or if I want to buy the options, I do need to wait. So given that I'm probably going to be a premium seller, as long as the options are expensive, I'm going to check that out right now, meaning an implied volatility of above 50. Indulge me this for a moment. Yeah. So the current implied volatility is 64%. So I'm willing to sell naked puts here because if the shares get put to me, I don't mind because I like the company. So if you approach the trade from that perspective, it kind of makes sense. Even Warren Buffett, when he was buying out one of his railroads, he used a lot of naked put selling to average down his basis cost. So this is probably a strategy that will probably take tomorrow on QCOM. And depending upon how far out on the call side we could get and get paid a reasonable premium, the anticipated in the money resistance level next week, which is 68.27% probability of trading out of the money, is 144.75. So we'll judge tomorrow. We'll see how the options are being priced. I don't want to get too close because I'm bullish on the stock to sell calls. But if I can get far away, that puts me right here. If I can get far away and get paid a decent premium, I'll sell a call as well, besides selling a put. $123.60. I like the put strike. So Qualcomm, definitely a play tomorrow. Now, I want to talk about emerging markets. I go over this chart quite often, and this is another area where we're going to be looking to make a major trade soon. And in all probability, I'm going to be buying a leap bull bears a leap bull debit spread. Okay. What does that mean? It's a bullish trade. I'm not going to be selling the premium. I'm going to be buying a 70 delta call option, meaning I'm going to buy an option going out probably to this December, if not January, if they're available, that the option is going to move 70 cents on the dollar for every dollar move in the share price. And simultaneously, I'm going to sell a deep out of the money call option that moves between 25 and 30 cents on the dollar for every price in the share price. Why am I doing that? Well, it helps finance the trade. And it also allows me to be wrong and get paid. What does that mean? That sounds really opportunistic. All right, so what if I'm wrong? What if we don't immediately go moving up higher? Because if you're going to buy options, time is not your friend. All right, so it really needs to start moving fairly quickly. But we're doing two things. One, we're going out in time, which affords us the opportunity to be wrong. Two, we're going to sell a call. So if I'm wrong, that call option will offset the time decay, and we may just take that call off the table and book a profit there. And then if we see a setup and we want to be net long of the call options. So that's the game plan here. But all we need for this trade to play out is the dollar to correct. And it needs to correct very, very hard. And for it to correct very, very hard, we need a euro that is done going down. And I'm not convinced of that yet. Let's leave this off with gold, then we'll do some chart requests. We'll call it a night. Gold broke through my price target of 1750 like a hot knife through butter. and we are now at 1725. I would love to call a bottom here. With the dollar still strong, I'm not going to call a bottom yet. I think it's quite possible. How do we trade today? We're due for a rally. We're going to rally. We closed up today, but we still saw sellers move in, taking it off of its highs. But these Stokes are like a coiled spring, and they want to move. And we're right into the third standard deviation Bollinger Band in red. I'll save you the technical jargon. We're not supposed to be there. All right. Let's do some chart requests. I got to log. Oh, it's 7 o'clock already. I can only go over the charts I have already had requested. All right. Folks, we're going to be using TrendSpider automated technical analysis. Great for back testing. Market scanners, you want to find great stocks. They're already built for you. They're already in there. Seasonality, unusual options activity, 35% discount code below. Take advantage of it. Discount code CON35, Contrarian 35, CON35, 35% discount code below. The lowest price on the web. Let's do this. Let's get rid of the sidebar. Carvana from Madman. Those that are new, we use a process called multi-time frame analysis, meaning we don't begin with a daily chart. We'll go with a bare minimum, a weekly chart to get a feel of where we're at. This will do. Let's take a look at the monthly chart too. I like it. Okay, so I believe you were talking about getting back to 20 on this. I got to go back to your message. Too many comments for me to find it, and the clock's ticking. So I'll give you my thoughts. I believe you asked, will it get back to 20? If you could just retype in that question, maybe I misread it because it's certainly a far distance away from 20. On the month so far, it's early in the month, a lot can happen here, but we are bouncing off of the VWAP, the volume weighted moving average, bullish. Weekly chart, one trading day left to go. Bullish week. I mean, we broke down last week, continuation move lower this week. What do we do? Reversal bar. What do I want to see before I got long? What are you doing to me here? I want to create my alert. I want to see a retouch next week. We'll keep a little bit of sensitivity on. Man, there's something wrong tonight. Lag. Even on my keyboard. Between the software that I'm using and even my keyboard, it's crazy. So our alert is at what happened here? What are you doing to me here? I'll sing to you so there's not an awkward silence. Mm-hmm. All right. That was weird. Let's try this again. CVNA. Did I type in the wrong symbol before? I must have typed in the wrong symbol. All right, now I understand the question. Forget about what I said before. That was the wrong chart. I wish I could find that chart. It looked pretty good. Carvana's in a lot of trouble. Monthly chart, we broke down last month. This month, we're going to do a retest of the breakdown point. No bueno. Weekly chart. Yeah, you want to avoid this one. Avoid it. You got a lot of resistance immediately above, particularly $30 a share. It's got to close above before I even entertain a long trade here. Daily chart. The daily chart looks okay. We have a higher low. Here's your pivot point, 31.93. I don't think you need to wait until 31.93. Listen, if you're going to use a tight stop on this and we break below today's lows, then fine, scratch the edge and buy a little bit. But ideally, you lever up on a breakout above $30 a share. And we're set. So very, very short term bullish. I don't like the weekly chart. I do not like the monthly chart. Now, the weekly chart can get resolved if we have a strong Friday and we close above resistance. So, as an investment, would I invest in this right now? No. Via Health, yeah, this sector is in fuego, but I wouldn't buy this stock. We'll come back to the daily chart. I don't know this company. I'm going to get a feel. Not a lot of history here. Big breakout above. I mean, this is a long consolidation. That's beautiful. Weekly chart. Yeah, you can't chase the stock. What I would do is this. I would wait for the pullback. Keep a little bit of sensitivity on there. Touch, bounce, and we're golden. You need a retrace. We're way too close to the third standard deviation Bollinger Band. We're not supposed to be here. We've come too far, too fast. And on the daily chart, and this is the value, folks. I've never analyzed this chart in my life. Never even heard of the company. I didn't draw these resistance levels above. I didn't draw the support level below. This is TrendSpider. Automated technical analysis. So we have resistance immediately above, allow for the pullback and a retest of support. We have our alerts set here. Maybe this will act as a support level, not quite sure, but down here at around $30 and change is the preferred price point. And we kept a little bit of sensitivity on it. Longer term, it's probably going a lot higher. The sector's in fuego. STVGF. 9 miles. This is an OTC stock. Highly, highly speculative. They're trying to break it out. With these stocks, you don't know if it's being manipulated. You don't know if their newsletter went out. You got to be very, very careful. Weekly chart. We've broken out on the week. Daily chart. So the momentum's changing. Right? It's in an uptrend. It looks as though it's going to see a continuation move up higher. So am I worried about it? Yeah, because it's a penny stock. And do I believe it's probably going to head up higher? Yeah, I do. So bullish. Just be careful. BBBY. Interesting daily chart. We'll come back to it. Let's start with the weekly chart. Trouble. Monthly chart. All right. So volume on the week is very, very good. Very, very good. Now, where we bottomed this month was support back in April of 2020. So we have a logical reason as to why we bounced on Best Buy. Best Buy. I always do that with Bed Bath. That's the reason why we bounced on Bed Bath, along with the rest of the market being oversold. Now to the daily chart. Daily chart's looking good. Good day today. We broke out above this volume shelf on good, really good volume. And again, where do we bottom out, folks? I didn't draw these trend lines. That's the algorithm. Told you right where it was bouncing. And it did. Follow through today. It looks as though we're probably going to head up higher. So if you have a multi-day, and this is what I was talking about earlier, about how you're supposed to really calculate whether or not you're going to have a short covering rally. Because, a lot of time people talk about the short interest. I don't go by that. I think it's kind of silly. Because if you have liquidity to absorb all the shares that are short, you're not really going to get much of a short squeeze. Well, you're looking at illiquid stock that has a high number of shorts who always want to get out at the same time. And that's the beauty of having a short squeeze in a stock that's got no liquidity. So the average 10-day volume, I don't care about that. I want the 3-month, 7 million. You have a potential for a couple of days with the short covering rally here. Not a huge short covering rally, but a short covering rally nonetheless. So yeah, no doubt this would be one that you could have more upside because you have shorts covering off of support levels. So bullish on BBBY as a speculative long. Last chart I'm going to be able to go over for Yoga Mac, RVN. Why is this not coming up? Larry, if you Bob, if you want to attract female subscribers, stop using the term bear market. Ding. Okay. Thanks, Larry. Larry always makes you smile. Thank you for your insight on the penny stock. Salty Army is legion. Yes, they are. Let the salt flow. Let it flow. Yep. All right. Let me go back to Yoga Mac here. Rivian, RVN. RVN. Why is it not coming up? RIVN. RIVN. IVN. Okay. Rivian. They really bounced back. I took a look at this chart a couple of weeks ago. Let's go to the monthly chart. Monthly chart looking okay. $32.07 is resistance. We closed at No worries, Yoga Mac. With all the mistakes I make, no worries at all. A close above 32.07 makes me bullish. We close the day out 31.63. Not quite there, but very close. Weekly chart. It's not TrendSpider. It's my system. Everything's slow today. We're very close to a breakout. I think clearly what we need here is a close above 32.07. Now, this is one where it's gotten a lot of bad headlines of late. Come on, man. So slow. Driving me crazy. Statistics. All right. So we have 3-month average moving volume, 20.28 million. Share short 50. Nah. Not really a great short squeeze here. Couple days worth of a short squeeze. So if you're interested in buying it, I would wait for close above 32.07. Let's check out the daily chart. Keep in mind, well, this is where we have our, 32.07. It's right up here. So 32.07 is the number, and a close above that, enjoy the ride higher. Rivian is okay with the stop loss. High volume is coming. Okay, Westlaw, hello. Franklin, it takes forever these comments to come up. Franklin, thanks for being here, brother. Folks, thank you for being here. It's a pleasure to be here. If I could ask you to please smash the like button and subscribe, I really appreciate it. TrendSpider, 35% discount code below. Automated technical analysis. You get a lot of value for a very low price. Take advantage of it. And everybody have an awesome, awesome weekend. I'll talk to you soon. Enjoy the summer weather. Be well.